You mentioned transferable skills a couple of times, but you also mentioned a financial snapshot. And franchises can have varying levels of requirements in terms of the assets that you have to have on hand, your net worth. Could you speak to those?
Sure, sure. And you're right, it's all over the board. There are franchises for $10,000. There's a small number, but they do exist. Well into the millions. We tend to work with high six-figure income earning clients, and they're usually looking to replace that or maybe even exceed that. So not all franchise models are going to do that. There are some in the really low cost side of things, maybe $10,000 total investment, that they do tend to be more kind of on the side pocket money kinds of things. We focus on scalable franchise models, and they're going to have they're going to have some meat on the bones, which means there is a correlate investment. So this is a hard one to answer because there are really good franchise opportunities in a wide variety of cost ranges. But general guidance I give people is that to be on the playing field, to look at a variety of good options that may lead to income replacement, someone needs to have a minimum of 100,000 that they would be able to put into the business. They may not put all of it into it right away, but I think that's a good starting point. I mean, that's what most of our clients are coming in at as a starting point for their investment, plus perhaps a business loan or a home equity line of credit. A lot of people are packaging together two or three forms of capital, but of one's own assets, 80 to 100 probably needs to be the starting point for most of our clients.
So if you're trying to replace a six-figure income, let's say $150,000, you're basically saying that you shouldn't come in with the expectation that one of those $10,000 franchises is going to be the replacement, which I think is good setting up expectations. I'm also happy that you mentioned other forms of financing and made a distinction between the amount of money that the franchisee is bringing to the table as compared to the total cost. So when you talk about a franchise that may cost, $500,000, it's not that the franchisee has to have all of that in cash, correct? Could you talk about some of the options they have for making up the difference?
Correct. And at an investment that level, there usually is some debt involved. There are various small business loans. The majority of them, they have different minimums. They have different kind of requirements. I'd say something that I see in common with most small business loans is there's got to be, the bank wants to get paid. So they are looking for borrowers to have good credit. They are looking for borrowers to have a certain level of liquidity. And if the liquidity level is not there, then they may require that there be a W-2 income of a certain level coming into the house in order to satisfy what the bank is looking for in terms of security. So a lot of people do go the small business SBA loan route. Alternatives are home equity lines of credit. If people have an equities portfolio of a certain size or type, they may be a candidate for a portfolio loan or a securities backed line of credit, which can actually be quite attractive. The HELOC and the portfolio loan, actually, if someone can do that, in my opinion, that may be preferable to an SBA loan. It's faster, the interest rate is more favorable. It's quicker. There isn't quite as much paperwork. There's always a lot of paperwork, but those are not necessarily options for everybody. So an SBA loan is a very popular form of debt financing that people in franchising are utilizing. Some people may have certain kind of life insurance policies, whole life cash value life insurance policies. If they have that in place, that can be an attractive source of some capital. And then a very popular one, although people don't really know about it until they start looking at this, is there are ways that people can utilize dollars that are in a retirement plan, in a 401k or an IRA. It's called a rollover. It has to be structured in a very specific way, and it's something you really want specialists with this form of financing to help you with. It's not something you want to try on your own. But when you're doing it right, you're not triggering taxes, you're not triggering penalties, and it actually can be, what I like about that form of funding is there's not debt against it. So, and that is actually quite a popular way that people will gain the liquidity to then qualify for the business loan. So most people, that was kind of a handful. I see most people are falling somewhere in those buckets and oftentimes might be combining two or three of them.